Good morning, trading world. It is August 26, 2022, about 8:35 a.m., and this is my pre-market technical analysis for day trading the SPY. Well, it's Judgment Day, or at least that's the ominous feel of today. Yesterday's close was very interesting. Up until the last 45 minutes, I just knew we were going to leave some leftover imbalances for from the last 2 weeks in place to go get today, but nope. This kind of makes the setup that much more perplexing to me. Outside of positions I already have on and cool with seeing the worst possible risk outcome play out, it's a wait and see day for me. Let's take a look at what the quantitative analysis says versus technical. Now, the quant side is based on risk, and for those that don't know, option models are basically the math we need for quant analysis. What is interesting is that we started the week with a weekly market maker's expected move of plus or minus 8.284 on the SPY. And down to the last day, we have an expected move of plus or minus 5.286. This says we have the possibility of going up to 424.79 or down to 414.22. Now, to take you behind the scenes a bit and let the computer do some of the math for us. Based on the numbers we have, the short play excuse me. The short play lies somewhere above 421 to 424, we'll say 425. And long plays are between 417 down to 414. But based on fundamentals and risk reward, long plays should be looked at as scalps, not to be held overnight. We also see the majority of open interest this is the numbers on open interest. The red is where bearish open interest or puts outweigh the number of calls or bullish open interest, and then vice versa. And as we can see, the total is skewed to the bear side on the puts. However, we're on a primary expiration. When we're on a primary expiration day, open interest really doesn't matter all that much because of the number of contracts that could be rolled or closed throughout the day. So that calculation today we can throw out the window. So that's kind of the peek behind the scenes when it comes to the math on the quant side. Now, on the technical side, there was a magnet that wanted to draw us back toward the 413 area. That's this green line down here. That's basically the market maker's expected move for the week. And if we kind of go, let me bring up a Okay, I got a 4-hour chart up. Now, with the same line in place, that 413, you can see how we basically skirted below it, now back above it, and it almost looks like we want to kind of break off and head back down towards that 413. So you can tell this week it has an inordinate pull on price action to get us back down toward that 413. Now, yesterday we had a good push going into yesterday's close to kind of get us out of that magnetic pull to the 413. However, if this was a day without Fed speak, I would say we're due to get pulled back down due to leftover imbalances to the downside and market strength. Now, looking at the 4-hour chart, there is still upside potential that could be magnified by dovish Fed speak that could propel us to and through the 423 area. And that's up here. That's pretty much close to where we started the week at. But to go a step further, let's take a look at the daily chart. Now, the daily chart backs up this same possibility. However, we got to be aware that the daily chart has already cycled to the upside. As you can see, the MACD has already fully cycled, and we have a negative momentum cross on the MACD. However, we're still above the zero line, which means the uptrend is still in place. But we do have a negative momentum starting to pick up. So from the daily aspect, this is a last gasp or a possible retrace that may not last long at all due to negative momentum on the MACD starting to pick up. So that was a look at kind of the quant side versus the technical side. And I talked about something a while back called dissonance in the market. And I usually feel good about, I have a much better feeling about trades when the quant side is in harmony with the technical side. But when they're off and we have dissonance, that's when things kind of get screwed up a bit, and I have that I want to kind of step back and wait and see, because there are so many things playing against each other. It makes it hard to really pick up and, for me, take full positions on moves, especially when they're in a clouded area. So now I'm running behind. Let's get to the key levels of the day. All right, here we are back with the key levels of the day. Starting on the resistance side, we have our jack resistance 418 to the 419 area. Then we have our queen resistance 420 to the 421 area. For me, this is going to be key for today, because I really don't want to think about shorts until we reach that level, unless for some reason this 419, the previous close, shows strong resistance during the first part of the morning. Then we have our king resistance 422 to the 426 area. If we get past that 420, 421 area, this could wind up looking like a blow off top with the amount of force we could come up into this king resistance with. On the support side, we have our jack support at 417 to the 416 area, queen support 415 to the 414 area, and then our king's support 413 to the 407 area. Be mindful that the market maker's expected move is around this 413 area. Now, the main thesis for today. The main thesis is bearish, closing below the 419.51 with a projected target low of between 417 and 409. The alternate thesis is bullish, closing above the 419.51 with a projected target high of between 420 and 426. We have to be very careful on days like this, because with Fed speak, things can go awry, and that's when we have those super explosive alternate theses that take place, where we had a whole lot of people sitting on shorts here and here, and once we get through that alternate thesis and all of those shorts then have to cover, and we add on to that bullish movement up, almost like a snowball effect, getting in bigger and bigger as we go up. Now, the current major channel we are in is 416 up to 425. The major channel below is 416 down to 397. Now, at the last few minutes into yesterday's close, we went and got the leftover imbalances above, which means today will be completely a new script, or off the cuff, if you will. Let me bring up the scenarios for the day. All right, our first scenario is our expansive range day structure. We could look to see some powerful moves up and just as powerful moves down as the Fed inspires a tug of war between the bears and bulls. So we have a lot of news coming out actually right about now, where the start of some data drops are happening now, which could push us up and kind of keep us going through the cash open, and we reach our resistance and we get that tug down and just kind of snowball and keep going down, and we reach a support level somewhere around the queen, possibly the king, before we start putting together a rally to come back up. So that's our expansive range day structure. Range days are extremely hard to plot because there are a million different ways that things can go. All right, our next day structure is our rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area and find midday chop around either the queen or king's resistance before spending the same energy we use going up to come back down the second half of the day. With the rounded reversal day type structure, we do have a vice versa alert, which could look like this. Due to all the reports that we have showing up, we could look to end up getting a continued push lower toward the jack or queen support area. then finding our midday chop around the possible queen or king support area. And then the second half of the day, we could have a rally with the same amount of forces as we had coming down the beginning of the day. So that's our rounded reversal day type structure. All right, our last scenario is our trend day down. We could open gap down and start with a rally or maybe just sideways movement back toward or around our previous close represented by the blue line. We find resistance on or before that previous close, then begin the downtrend for the morning. We find midday chop around either the possible queen or king support area. And caution today, midday chop may or may not happen today. That midday chop could actually be a plunge, a sharp plunge or a sharp rally today. Based on the Fed speaking, all the data drops that we have coming out today. But if we do find ourselves in that trend day down mode, it's going to be interesting to see how the second part of the day plays out, because we could have a pretty good rally going into the close. Now, because of all the data drops and because the Fed speak, we could very well find ourselves in the vice versa alert for the trend day model, which could take us from trend day down to a trend day up. And what would happen here is if we get enough push on some of the reports pre-open that pushes us up into a gap up scenario, and then we could find ourselves fading back toward the previous close. And we would then find support on or before that previous close and then get into our golden window or our primary trend for the day up. And if that happens, we go up, we reach our midday chop somewhere around the queen or king resistance area, and then we could possibly get a huge head fake continuing up. And then again, it'll be interesting to see if we get a fade going into the close or we continue a strong ride up. Now, based on that strong ride up, we want to see where we end up at on the longer term chart time frames. Because if we get a strong ride up, this undoubtedly in my mind puts us into kind of a bearish divergence that will happen on the daily time frame. And if we get that bearish divergence, it could be Monday, it could be a week, it could be 2 weeks where we start to see that bearish divergence play out and we get some extreme plunges going back to test the lows in the 370, 360 area. But we go back to retest those lows. So that's something to keep in mind for today. Again, I hope this helps. If you are at all at odds or don't know what, or you're on the edge of your account, this is one of those days. If you are not sure and you are not okay with the amount of risk you have, this is the day to sit on the sideline, get out, close positions, do whatever you have to do to get your risk back to within range to where you can accept it. Because again, like I said, outside of positions that I have on, this is kind of a wait and see day for me as I wait to see what the Fed speak is and what it does to the market. And if it puts us above that 421 area up to the 424 area, I still have to kind of wait and see, because even if I'm bearish on next week, we could have an unprecedented amount of strength because we're moving off the cuff right now. There's nothing in market strength above us giving me any play or any rhyme or reason of what this market will do. So that's why it's a kind of wait and see market for me. So with that, I hope this helps. And again, risk versus reward, especially today, more important than bullish versus bearish, because that's your number one job as a trader. It's to protect the capital that you already have. So with that, I wish you a positive trading day. Hope you have a great one.